Welcome to Real Estate Radio Live, an informative and engaging hour discussing everything you need to know about the world of real estate. Your host, Tom K. Wilson, provides you with insight and guidance from his years of experience as a successful real estate entrepreneur on how to buy, sell, finance, and invest in real estate, and much, much more. Now, here's your host for Real Estate Radio Live, Tom K. Wilson.
So nice to have you back, and thank you so much for tuning in to our Real Estate Radio Live program, your number one source for all of your real estate needs and education. We're broadcasting from the number one business radio station in the San Francisco Bay Area, KDOW AM 1220, the Wall Street Business Network. I'm Tom K. Wilson, your host for the 2 p.m. Wednesday edition of Real Estate Radio Live that comes to you Wednesday and Friday at 2 p.m. and daily Monday through Friday at 3 p.m., along with my co-hosts Joe Kuchera, Mike D'Ambrosio, and Bobby Decker. If you can't make the live show, you can catch our podcast on RERadiolive.com, and you can catch all of my programs on TomWilsonProperties.com or on iTunes or on YouTube. You can go to TomWilsonProperties.com and sign up for our weekly newsletter on real estate and economics as it applies to real estate. We have announcements every week about various events that are coming up in the area and online. You can get reports of several things such as the science of selecting the best metros and products, investing in syndications, commercial properties, and other topics like that. And you can also see the latest product offering from Wilson Investment Properties on commercial syndications that you can get for as little as $50,000 a share to be owner of a property that normally only institutional investors get to participate in, and also quality high cash flow rental properties in places like Dallas. We always welcome your questions and requests. Always are glad to offer free consultation. Well, with us today, we have returning back a guest we've had a number of times and love having with us because of his experience and clarity of information that he shares with us. We have Michael Morrongiello. He was the founder and president of Bay Area Wealth Builders, the longest running and one of the largest REIAs in the San Francisco Bay Area. Michael's been involved over the years in the purchase of thousands of seller finance real estate loans in every state in the union. He's bought and sold many, many properties, flipped many properties, knows the crucial skills that need to be mastered in order to succeed with discounted paper. He's always gives a lot of clarity and can size up situations very quickly. And he's just a great resource for information and shares a lot of information to his real estate community. He has company SunWest as a nationwide portfolio investor in real estate secured paper. So, Michael, it is always good to have you back with us. Thanks for being back on the program.
Yeah, thanks for having me, Tom. Nice to be in the studio here.
Boy, as John Schaub says, if you like roller coasters, you must love real estate. We've got some new topics. This recording, in case you're listening on podcast, is in third quarter of 2015. And past 2-3 weeks here, we've had some fun new surprises, such as Chinese devaluation of the currency. I think caught people off guard. A lot of folks were saying, gee, we hear that things are slowing a bit, but I don't think it was anticipated by many that they were going to devalue and then say that that was it. And then the next day they devalued 3 times as much as they did the first day. So we as if anybody needed to any education on whether or not their word can be trusted, that certainly punctuated that. And we had the market take a hit. Everybody's been thinking, gosh, how higher can it go? And maybe it never will stop. And lo and behold, everything reverts to the mean, including the real estate. So we had that event happen, and we got oil hit the lowest level in many, many years, got under $40 a barrel. So what's your take on all that, Michael? What do you think are those signs of changes in our general marketplace, and how does that apply to real estate, you think? Yeah.
Well, I think, there are some changes that are going to be taking place in the coming months. Historically, in the Bay Area here, as the fall takes fold, real estate tends to slow down a little bit. People don't quite move as much, buy or sell. So that in and of itself, I think, will be magnified with also some of these changes that are going on in the financial markets. But our good friend Robert Campbell likes to use the term that right now he's cautiously optimistic, and I feel the same way. I think that fundamentally that this market probably still can run on a little bit longer, but the events that took place last week certainly can just all of a sudden tweak somebody's psychological outlook on, well, is this really a good time to make a major purchasing decision? And as you know, I mean, if you're going to be in a property long term, it may not matter too much. If you're looking to be in a property over a short period of time, or you may have that short period of time adjusted because of job transfer or perhaps relocation somewhere else, then you might want to consider the timing aspects of making that kind of big investment and tying yourself into a property.
If it hasn't stimulated a knee jerk on flippers, it should, right? I think my takeaway for short term is that you should reduce the length of time that you want to be in a product, because there's more uncertainty in the future now.
Yeah, I think that's a safe play. If you're in the business of renovating properties and reselling them, you want to look out just towards that horizon and not go too far past the horizon to figure out what's going to happen 15 months or 18 months from now, because we may be in a whole different financial situation with our economy as well as the global economy. And that could be very, very dangerous or exciting for the person that's got a piece of property that they're bringing to market, and it's based on an enhanced value.
Well, investors have been complaining about not enough product available for quite some time. Maybe that's about to change.
I think so. I think that again, this is a time of year when things do slow down a little bit, and you'd never know it by looking at the markets right now in the Bay Area. But things that happen on Wall Street and elsewhere can just have that psychological change take place, and that can have an impact, no doubt.
When people ask me about takeaways from the experiences I've had investing, certainly I always place near the top that how much I've learned that the market is thousands of submarkets. And here's another case in point, right, where we just had Bruce Norris on a little bit earlier or in the prior show, and he said, California right now is sitting at about 20% affordability index, which puts it at reasonably okay. But you can come to other markets like Palo Alto on the Bay Area, and we're down in the 15% or lower, which is below the point at which California crashed the last three times. So certainly submarkets, and not only in geographical submarkets, but in price category and type of product, can take curves all their own. And I think the problem is that it's easy for people to get data on metros. The CoreLogic, Zillow, all of those provide that. But when you drill down into a neighborhood, it gets a little harder. But it's you need to be very prudent and make sure you get that information to see how your neighborhood that you're considering investing in is different than the overall one. The standard deviation is huge.
Yeah, and remember, the interesting thing about real estate and contrasting it with other types of investments out there, specifically in the financial markets, is I've never seen a property or a house drop 30% or more in a day. It just doesn't happen. And so that's a big advantage, is that if you're in it for the long haul and you've structured your transactions for the right reasons, and you're getting maybe even some use out of the property in some form or another, you really can weather these storms.
Like income.
Yeah, like income or occupancy if it's a house you're living in.
Yep.
Yes, and you don't really have as much to be concerned about what's going on externally, whereas the people in the financial market certainly felt that last week.
And yes, you just don't see the cliff-offs and liquidity issue. Often comes up with folks who are concerned about investing in real estate, and they say, "Well, at least in stock, I can sell it." And I say, "Yes, you can. At any time your stock is worth half of what you paid for it, you can make a call and get half your money back right away." but it might be pretty painful, and usually you don't see swings that are quite as dramatic and volatile, certainly in real estate, which doesn't mean that you don't need to be very sensitive about the timing and what quadrant you're in for the cycle. But it's
I think it's like a big, cruise ship. You have time to make those rudder changes or courses of action changes, if you will, as if you see things happening up ahead. Whereas, as you said, that price of liquidity with the stock market or other financial instruments, you can certainly sell and sell quick, but you're going to sell on the day that you need to sell and whatever the market's going to pay at that time.
Isn't it amazing that I see here in an article that that American investors have have lost
trillions.
Yeah. Trillions of dollars, well over $8 trillion, and which is half of the national debt.
It's outstanding. It's just shocking when you see that cumulative losses that have taken place. And you wonder why a lot of people haven't gotten back in and have tipped. It really is an interesting phenomenon.
Yep, and so it'll be interesting to see what path people take now that the market is showing some uncertainty and some corrections.
Yeah, no, I think that there is a lot of – the good news, I think, is that there's still a lot of opportunity with real estate. But, again, education is something that we preach, and people need to understand that they need to not just jump in willy-nilly. They need to know a little bit more about the mechanics of how to benefit and put deals together so that they can come out okay at the end.
Mm-hmm. Yep, indeed. It's so it's a time that I think a lot of people are considering maybe shifting their – investment strategy and maybe have a little bit less in the more volatile securities business and take a fresh look at real estate. And as some of these markets in real estate are starting to top out and maybe sag a little bit, have a little bit better supply-demand ratio in favor of the buyer, maybe there's some new opportunities here. We have with us in the studio today Michael Morrongiello, who is a longtime investor, president of Bay Area Wealth Builders, and a note specialist. Always great to have him with us. Come back with us right after the break, and we'll have some more interesting topics to talk about on KDOW 1220 AM.
For more information on today's program, visit RERadiolive.com. That's RERadiolive.com. Welcome back to Real Estate Radio Live, streaming live on iHeart, TuneIn, and KDOW.biz. For more information on today's topic or guest, just visit RERadiolive.com. That's RERadiolive.com. Again, your host for today's edition of Real Estate Radio Live, Tom K. Wilson.
Nice to have back with us today Michael Morrongiello, who's president of Bay Area Wealth Builders and founder, longtime investor, and giving us some insights on what we do with this market where we're showing some volatility in the stock market, and real estate maybe is starting to show signs in some markets of reaching near the top, which may create some new buy opportunities. Most investors have been complaining for quite some time now that even in markets in non-traditional, non-bubble cities like the Midwest, like a Dallas and Atlanta and so forth, are even been very difficult to find enough supply to get good deals. Like tell people that in Dallas, which has been my favorite city in the last 15 years, that before the crash, I would bid on 3 to get 1. Well, after the crash, I was bidding on 40 to get one, and now I struggle to find 40 to even bid on. So, but we still find some. So, Michael, I'm sure there's a lot of folks that say, all right, everybody's talking about real estate, and I know somebody that's made a bunch of money, and, of course, they don't realize how difficult it is to get enough margin to make money and how hard it is to find product. But that being said, there's still opportunities. There are always opportunities. Let's talk about some of the mistakes that people should avoid. And one of them is to accurately evaluate what the value of the product is that they're buying. Can you talk to that a little bit?
I think that whether you're buying to be a landlord and to deal with tenants, or you're buying to resell, the so-called flipping business, everybody wants a deal. They want to try to get something under value so that at the end of the day there's some equity going into the transaction. But what we're seeing is people jumping in and not really understanding all of the cost involved in doing business, both on the acquisition side and on the resale side or the disposition side. And there's a lot of costs that you need to take into account. Now, Stephen Covey, he's the author many of us know, and he had a wonderful slogan that was always begin with the end in mind. And it's very, very true with regards to a piece of property. You want to look at what is the potential resaleability or value of that asset once it's improved and you've buffed it up, polished it up, and done what you're going to do to it. You want to have a good understanding of what that value is before you go in, and then take into account these costs. There's cost to buy. There's transactional cost to buy. If you're borrowing money to buy, whether it's through a traditional lender or a private lender, there's going to be cost involved and perhaps points. There's insurance costs. There's tax costs. On average, it could be as much as 19% or more of cost involved to acquire that asset, run that asset before you sell it. So even if you're buying at the so-called 70% of the so-called after repaired value or market value, once you're done with all your upgrades, that still leaves you a very, very slim margin for profit, assuming nothing goes wrong.
I see some people buying, assuming that if they have a 15 or 20% gross margin, that they can squeak by, and it's wow, how dangerous that is. I usually give those folks a list of all of these things that they forget about, just utility costs and insurance, and not even to mention surprises, right?
Well, what about Murphy's Law?
Yeah, I don't know that I've ever had a rehab that I didn't find some surprises, right?
Always something seems to come up, and yes, you do need to allocate for that. Otherwise, at the end of the day, that nice project you took on may not make any money for you if you're looking to resell, and if you're not looking to resell and you miscalculated the rents too, that could be an issue too. Mm-hmm. But very, very important to look at all of the cumulative costs involved and the time that's involved in a particular project. And some of these projects that people are taking on right now, they're very protracted. They're not what we like to say in and out type transactions. They can go on for months, in some cases, a year or longer.
Yeah, that's I think one of the biggest errors. People assume they can get in and out of X months, and it frequently takes longer, and it's not just a matter of when you're done. It's like, all right, now you have to, if it's not a long-term hold, if it's a sell, now you got to plan for selling it. Yeah. And the first buyer may fall through, or his loan falls through. You got to start over again. Yep. And all that time you're paying debt service and so forth. We have with us today in studio Michael Morrongiello, who is a longtime investor and president of Bay Area Wealth Builders, giving us some insights as to mistakes to avoid when you're just beginning in real estate. This is Real Estate Radio Live. Tom K. Wilson. We'll be back with you in a moment.
For more information on today's program, visit RERadiolive.com. That's RERadiolive.com. Welcome back to Real Estate Radio Live, streaming live on iHeart, TuneIn, and KDOW.biz. For more information on today's topic or guest, just visit RERadiolive.com. That's RERadiolive.com. Again, your host for today's edition of Real Estate Radio Live, Tom K. Wilson.
We have Michael Morrongiello with us today, talking about the 7 biggest mistakes to avoid when investing in real estate. We talked about in the last segment how to not underestimate the cost in acquiring a property, and or the time that it takes to get it to either cash flow or to get it to sell, depending on what your objective is. And certainly, item number 2 would be it's very popular in a climbing market when things are tight for to find property, that investors assume that they've got some additional margin in the amount that the property will appreciate over the time that they hold it. What do you think about that idea there, Michael?
I think it's extremely dangerous, Tom. I call that the greater fool theory, and
but it works sometimes.
It can work when a rising tide lifts all boats. I've heard that said once in a while, but when that tide isn't rising is when it gets real challenging. And we all know, I think, that have been involved in real estate. You make your profit when you buy, when you go in. You realize that profit when you sell, but you've got to buy right. You've got to buy with enough meat on the bone so that you can have some profit at the end of the day. And too many people are paying tomorrow's prices today. And yes, that will work when a market continues to escalate and rise. But when that stops, that's when we see a lot of people get that crash and burn.
Yep. You buy something, make sure it works based upon the price that when you buy it, the value, market value they estimate when you buy it. If the market goes up and you get some extra, then treat that as gravy. That's great. You were lucky. You weren't genius. You were lucky. Remember, if you catch it the wrong time, it could go down.
It can go down. We found that out the last few years. I mean, real estate can go down as well in value. Yes.
You just mentioned in a prior segment about the famous statement of know your exit plan before you buy. That's not only an exit plan, but probably having a backup exit plan is good too, isn't it?
Yeah, it really is. If you can have more than one exit strategy, and that's very challenging for people in the Bay Area because rents don't really equate to values here in many parts of the Bay Area, and it's hard to make a $1 million property cash flow. So many people are lulled into buying strictly for that appreciation component. But ideally, you want to have other exit strategies where you can put a tenant in there or tenants and get income coming in, or you may be able to sell on terms and realize a profit that way, or perhaps sell on a lease option to a buyer and have a buyer maybe buy the property that way from you, rather than just being forced to sell as an only way of realizing your profit.
Yeah, and who knows? Maybe while you hold that property, there's the market changes or an opportunity changes, so you have another exit plan. But you ought to be having at least a backup at the time you buy it, not just have more than one.
Ideally, more than one road to travel down, if possible. And again, it is challenging in the Bay Area because of values and the fact that rents are not quite up with regards to where values have gone. Of course, that may change.
Yep, an area that's in the Midwest, southern cities. There's certainly a better opportunity if you have to hold on to a property because the resale market softens, that you can rent it and do okay. A lot of retail flips are even higher priced than what rentals are, but if you don't let that get too large, at least you can save the boat by being able to rent it for a while. Stay with us here with Michael Morrongiello. We're talking about the 7 biggest mistakes to avoid when you're investing in real estate today. We're on the KDOW 1220 AM, Real Estate Radio Live. This is Tom K. Wilson with hosting your edition on real estate investing. So stay with us. We'll be right back.
For more information on today's program, visit RERadiolive.com. That's RERadiolive.com. On iHeart, TuneIn, and KDOW.biz. For more information on today's topic or guest, just visit RERadiolive.com. That's RERadiolive.com. Again, your host for today's edition of Real Estate Radio Live, Tom K. Wilson.
We have Michael Morrongiello with us today from Bay Area Wealth Builders, president and founder, real estate investor, very experienced expert and note specialist, talking about mistakes to avoid when investing in real estate. We have a volatile situation here in the third quarter of 2015. Hopefully it's nothing like the Great Recession or the crash, as we refer to it in real estate. A lot of people found out for the first time that real estate can go down. Michael and I have been around long enough. We have seen that happen before, but there are always opportunities, but you got to know how to do it and how to go about. People sometimes forget there's more than one way to buy a property, isn't it? There's more than one option. Yeah,
most people, Tom, are very myopic, and that is that they think that cash is the only way to buy and to buy cheap. And the truth is that when you buy a property for all cash, it's probably the riskiest way to buy because I equate it to playing poker. You're all in. And you're all in. Now, that may be a good thing if you can get out and you have a winning hand. But, buying for cash can be very dangerous. Now, where do people typically buy for all cash? Trustee sales or auctions where there's limited times to inspect the property or no time at all. Or where they have to move very quickly and they're willing to waive contingencies or inspections or other crazy things. So being able to buy with other ways than all cash, I think, is very, very important. And that takes a lot of education to learn some of the other techniques because there's plenty of cash looking to find a home in real estate right now. And there are people that are very savvy out there that are buying even houses based on income, just like an apartment building. And they're going to probably outcompete maybe you or I, some cases that are needing more meat on the bone, more room there if we're going to try to resell that asset. So I think there's a lot of other options that they can look at. They can look at leasing a property. They can look at leasing a property and coupling it with getting an option. They can look at master leasing a property, which controls a property and not even buying it, just leasing it and having the rights to sublease the property, which is a very high leverage way of creating some income and control over a property and not even owning it. And then, of course, there's one of the favorite things I like, and that is to get terms. And my good friend, and you and I know him very well, John Schaub, likes to say that he'd rather have favorable terms more than anything else, because the price then becomes really irrelevant. It's more about the terms that are offered to make that property, even cash flow here in a crazy expensive place like the Bay Area.
Indeed. There's Michael, you've been great at teaching creative financing, and people, it sounds scary to them, and you've shown how there are lots of ways to do that, and very straightforward approaches. And I'm sure you'd welcome folks to come to you and bounce off their questions and ideas.
Well, yeah, I've been at this a long time, and I strongly advocate education. I think that's one of the big things. Even to this day, I know both of us and many people that I know are constantly going to classes, constantly honing their edge and keeping it sharp, if you will, because there's a lot of ways you can do this business. And my friend Peter Fortunato, another friend of ours, likes to say that when you buy with cash, you're somewhat lazy also. You're not really exercising the brain.
People don't realize sometimes that you can't buy an REO with the objective of wholesaling it off to someone else, because you can't buy an REO with as an assigns.
Yeah, I think that's become very strict. There's a lot of seminar promoters that come through town, and they're preaching how to go out and buy bank-owned properties or REO properties and then assign the contract to some third party. And from a practical standpoint, that ship has sailed. That's very difficult to do. First of all, the REO inventory has slowed down significantly as this market has firmed up, but also just the paperwork and the restrictions on assignments that have taken place. The banks and the lenders are onto that game. Now, there are still ways that you can buy and sell REO property or bank-owned property, but it's going to require a different methodology.
When everybody who is an investor is having trouble finding products, you've indicated that you think one of the mistakes people make is once they've lost a deal to assume that that's it, and that that product is never available again. That's not necessarily the case, is it?
No, I like to tell. This is a sales game for most people, and in sales, to me, one of the best things that a salesperson can have or learn to do is to be persistent. I think that's a skill that you can achieve, and a lot of times it's the follow-up. The follow-up in tracking what happens to a property once it goes contingent or goes pending, because many of them do fall out. And there's a lot of aftermath of coming back to you and coming in at that point and buying the deal at the point that there is a fallout that takes place.
Kind of an analogy to that is I have an agent that I know whose biggest source of listings is looking for expired listings and going after those and saying, here's all the mistakes that your prior listing agent made, and I will fix this for you. So look for things that fall out. Don't assume that once it's done, is indeed the case.
He probably owns a pit bull as well, I suspect, because he likes to latch on to people, I guess, and not let go. But that's how you have to be. You have to be tenacious in a market where the inventory is tight.
You sure do.
And follow up is really very, very important.
And education indeed important, but after a while you just got to get in there and make a lot of bids. I've had folks come to me and say, Tom, I don't know what I'm doing wrong. I've bid on 3 properties and I didn't win any of them.
It's funny. I have, being in this educational thing for a while, people come to our classes, they come to the events that we put on, and there was one gentleman, and he'd been coming for about 3 years, and we asked him, how many properties have you bought? And he says, none. And I said, well, how many offers have you made? And as profound as it sounds, he says, none. And the reality is nothing happens if you don't make an offer. But you've got to take action. Absolutely.
We have with us today a frequent guest that we love having on, Michael Morrongiello, who's the Bay Area Wealth Builders president and founder, very experienced investor and note expert, who's given us ideas on things to avoid in being in real estate and looking for products. We'll be back for a wrap-up in a moment and some events that are coming up on KDOW 1220 AM, Real Estate Radio Live. Stay with us.
For more information on today's program, visit RERadiolive.com. That's RERadiolive.com. Come back to Real Estate Radio Live, streaming live on iHeart, TuneIn, and KDOW.biz. For more information on today's topic or guest, just visit RERadiolive.com. That's RERadiolive.com. Again, your host for today's edition of Real Estate Radio Live, Tom K. Wilson.
It's been a pleasure having our friend and frequent guests back in the studio today, Michael Morrongiello, who's the president and founder of BAWB, Bay Area Wealth Builders, REIA, up in Marin County. Go on their website and look for all the upcoming meetings. And we've been talking today about the volatility of the market. There's always ups and downs, and that usually creates opportunities. So don't be afraid. Just learn mistakes not to make, and don't do analysis, but so long. Go reach out there and take some action, and don't try to do everything yourself. There are a lot of folks that will help, a lot of organizations like BAWB that can give you education, help hold your hand, find partners that you can start with. I always like having an expert around me. We have a lot of events coming up. We have, if you're listening to this in before October or early October 2015, if you're listening on podcast, we have a lot of events happening. First of all, there's Bruce Norris is coming up to San Jose Real Estate Investment Club, SJREI, on October 8th for his annual presentation there. And on October 10th, Bruce is doing an all-day workshop. On the 16th of October, there is the I Survived Cancer Charity event. Black tie, sit-down dinner, social networking with a number of national speakers, including Dr. Doug Duncan, Chief Economist of Fannie Mae, and many others. So don't miss that one. And then on November 22, there's a field trip in Dallas, all-day field trip and expo on the day before that. So go to TomWilsonProperties.com if you'd like to sign up for those. And Michael, you've got Jack Shea coming in.
Yeah, we have a class. I know one of your previous broadcasts about trust, and it's a very valuable tool for real estate investors or property owners to learn about and really get that bullseye off your back. So Jack Shea is doing a master trust class Saturday, October 17th, down near the SFO airport. Everybody that comes to the class will get a fabulous book with all the forms and the benefits and being able to learn how to create their own trusts and come away with being able to operate that trust. That can be found, the information on that class on our website, BAWB.info. Again, that's www.bawb.info. And then we also have an expo coming up in Napa called the Crush It Real Estate Expo. It's a great networking event, great educational event. Come up for the education and the networking. Stay for the food and wine. And that's Saturday, October 3rd.
Great. Thank you, Michael, and thanks for being on the program again. And always go to TomWilsonProperties.com to see what the latest commercial syndication opportunities are at $50,000 a share, real estate properties, rental homes, high-quality turnkey homes as well. Sign up for our newsletter on TomWilsonProperties.com and look for a number of white papers and other valuable education material that's there. Thanks for being with us. We always enjoy having you and our guests. And remember that the only thing that matters is what you do next. See you next week.
You've been listening to Real Estate Radio Live. For more information on today's program, visit RERadiolive.com. That's RERadiolive.com. Tune in, log in, download our podcast. Discover more at RERadiolive.com. RERadiolive.com.